Coming up in this show, Matt's going to introduce a new segment to you called Inplay. You're going to learn a great approach to trade identification, when to act. I'll bring you a big picture, the long-term analysis on gold. Correction is here, and it may still have a long time to go. I'll show you our cycle analysis workshop special. You're going to learn the method used by me and the askSlim team. Just a fantastic way to understand the markets. And I'll bring you my analysis on the stock market. We'll look at multiple time frame analysis in the S&P 500 for all trading styles. And we'll look at our ranking system. It's the top traded, widely held stocks. You're going to love this way to see our analysis. Get ready. Here we go.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim, and this is the askSlim Market Week. Let's look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. I hope you love what you see here. Those of you that are brand new, get acquainted. Go to the askSlim.com website, sign up for our Snapshot Lite free. Go up to the free stuff. This is a great report that Matt puts out every single day on the S&P 500, absolutely free, no credit card. And on YouTube, subscribe to this channel. Click the notification bell and do like this video. Give us a thumbs up. And on X, follow me at askSlim. And any questions you might have about our memberships, about special offerings that we have, education and analysis, write to Matt at askSlim.com. All right, you're going to love this. Matt is sharing this new video segment that we have, and this is just a great way to learn about how to identify trades when they are in play. Matt looks at FDX, and he's going to teach you how he uses these multiple time frames. If you want to see the full membership video, you'll need to go to our website, levels 2, 3, and 4.
Hello, this is Matt with askSlim. Today we are excited to announce we are launching Inplay, a new video series spotlighting the key levels that define directional moves, the scenarios, the triggers, and the invalidation points that help guide some of the most important decisions that go into our trade planning process. Today's lineup includes 10 symbols that we will be focused on, 5 bullish and 5 bearish. We're going to start off with FedEx Corporation. So let's go jump into the charts here. With each one of the symbols that I review, we're going to go through the Inplay map checklist. So there's 5 areas that we will cover. We're going to define the directional bias. We're going to mark the projections and key levels. We're going to determine whether the move is active or pending. We're going to specify the trigger that turns on the next swing if it's not currently active, and we're going to state the invalidation, the level or condition that cancels the bias and requires a reevaluation of the in-play map, those key levels and projections. Okay, so I have a multiple time frame chart up here, monthly, weekly, daily, 2-hour. Our overall focus is for the next few to several weeks is the time frames under evaluation. So let's start with defining the directional bias. So I'm going to go to the daily chart here, and it's quite clear, and I have some high-low markers here. So these are weekly high-low markers. And you can see over the past 3 weeks that FedEx has broke out above the prior weekly highs. So clearly it's in an uptrend over the past several months here. That's on the daily chart. And then on the weekly chart, you can see that we have a momentum indicator here, and the momentum indicator is positive. Actually, we have a combination of momentum indicators here. We have a reversal scout, and we also have our slim ribbon. So our slim ribbon is made up of 3 exponential moving averages, and then depending on the alignment of those, if there's a positive alignment, it'll color the candles green. If it's a mixed condition, it'll color it purple, and then if it is negative, it'll be red. So the combination of these two indicators really helps to give you a sense of the momentum trend. The reversal scout's more sensitive, so it's going to turn earlier, and then you have the slim ribbon, which is going to really hug those trends and takes longer for it to shift. I also have on the far left here, we have our monthly chart, and the one key indicator that I have on here is the reversal scout. Okay, so we have from left to right, if we look at the daily, positive condition, on the weekly, positive, and then also on the monthly, you can see it just turned up here. And then on our SMI, the 2 time frames I'm going to focus on are going to be the weekly and the daily, and you can see that currently, let's call it the move that is underway, is an upside move where we have the slow that's crossed over the fast and is still holding above on both of the weekly and the daily charts. Okay, so we've covered the directional bias. Now, what are our key levels? So you can see on the daily chart that we've already entered into a short-term fib zone. So FedEx has been strong. It's already entered into a fib zone. This fib zone in the short term runs from about 259.25 all the way up to about 269. And there's an intermediate fib zone that runs from 259.25 to 269. And then actually based off of this longer term monthly pattern, so this won't be over the next few to several weeks. This might be over the next few months or so. There is a longer term fib zone that is way up there. So again, this is the next several months. All of these zones are in play. All these levels are in play. And why is that? Well, we have directional bias again that is positive. And we also have momentum conditions that are positive in the daily, the weekly, and the monthly. So what would pause this active in play move would be to see the momentum shift negative in the daily chart. That would pause our overall upward move here. And what would change the overall bias, it would be 2 things. One would be if we saw the reversal scout go negative in the weekly, and then also if we saw a weekly close below this 233. So that is our invalidation point where we would have to reevaluate. Again, if we have the combination of the reversal scout going negative and then a weekly close below 233, that would require reevaluation. Okay, that's FedEx.
We've had a lot of people ask us for an update in the gold market. I'm doing a big picture here. You're going to see the long-term analysis. And coming soon, our Investors Hub. Had a lot of people that are looking for longer-term information. This is going to be it. Watch for the release of the askSlim Investor Hub. Big picture analysis. This is gold. I'm going to show you long-term analysis in the gold market. And you're going to see more like this. Coming soon will be our Investor Hub. We're going to have all of our long-term analysis in there for members. Look for that. We're going to be launching that very soon. All right, let's take a look here as we look at the gold market. This will be a quick one because you'll be able to see how the cycle analysis that we do is so valuable in understanding the market conditions, the market direction, the momentum, everything. So here you could see the chart, candlestick chart, and on the bottom is our reversal scout. Now often you see this as a line on the chart, but I want to keep it clean. So I put it on the bottom in this chart that's a little bit different. You can see when the reversal scout is green and moving up, it tells you that there is good, powerful upside momentum. And when the reversal scout is down, when it's moving down in red, as you can see right over here, then you have this negative market. And then when it changes and goes from red to green, there's a transition there, and you can see when things really change. Solidly green right over here, makes a compound top, and then comes down. Okay, that's good information, but As far as our team believes, that information is really lacking in a big way because we want to understand the rhythms in the market. And we can do that by looking at cycle analysis, and you can see that right here. I'm going to switch over now to the monthly cycle analysis, which we share with our members, and I do that by putting our work in there, and that is right here. Now, all of a sudden, you can see something really changed. This is the same chart I just showed you. However, what this has is clear rhythms that are marked off in these charts. So what you can see is that there is a big chart, a big cycle bracket right in there, and that is the most dominant in each of these harmonic families. You can see right over here, this harmonic family was made up of 2 half cycles or 2 intermediate cycles and 2 quarter cycles right in there. Very clear. Here you could see, well, maybe not quite as clear because the timing was a little off in here, but this you could see was the first half cycle. Here's the second half cycle, and then each of those made up of 2 quarter cycles, as you can see. So that's really a very clear look at how the cycle analysis gives us good information. You can see where this top came and this top came. These were double tops right over there. And in this period where all of them come down, that's the period of risk. That's where there is the greatest amount of probability for a corrective period. These periods where 3 of them, 3 cycles are in corrections, tend to bring bigger declines than the ones that are kind of in the middle right over there. You can see right over here where this was in the middle right there where there were 2 cycles at the half point cycle, and then the next rally came, and then it just couldn't go anywhere. And once it broke this trend line, it told us this cycle was going to be negative for quite a while. Now, if you look at this big cycle and this big harmonic family right over there, once it broke out of this level, wow, we became very bullish. That happened right as these were all 3 turning up. And that gave us a very bullish scenario. And then when you look at the reversal scout, right over here it turns green. That's right at this point right over here and tells us, wow, we've got upside momentum going on right now. And the market absolutely soared to the upside. Now, this went much higher than where our projection was at the beginning of the year. But when a market gets into a strong momentum move, as we've seen in many markets, it can really go far. And this one went incredibly far. Let's just take a look here as I zoom in and you see this cycle that we're in right now. So again, here's where we are in this corrective period where there are 2 cycles coming down. You can see the yellow area. We show that as the period of risk right over there, like we did over here, and like we did on these other cycles back over there. So here we are in just where there are 2 cycles coming down. And if you look right over here, basically what we look for is the next cycle trough to fall sometime in between these 2 lines time-wise. And Katie does a great job. She puts that information in our cycle low tracker, and you can have all of that information if you become a member, look at the cycle low tracker, and that information will also be available for long term for investors in our new investor hub. So you can see that what we're looking at right now is the potential for a corrective period right over here. Now, if I look at the ideal, which is right in between these 2 blue lines there that you can see, that comes in here around April or May of next year. So that warns me that we're probably in a corrective period. You can see this big tail, that shooting star. It really rejected these levels up over here, which were the fib extensions. A minor fib extension comes off of the minor low. The dominant comes off of the dominant low. And we keep those in there for the members. Now you can see the note over here is that all metals will be a period of potential surge 2026 and 2027. So that's after this low, 2026, 2027, gold can go much, much higher. So that makes this pullback in here, which you see there's only some, 3, 4, 5, 6 months for, this would be a really good buying opportunity were it to get down there. Now, the top of that support zone is at around 3,700. It's about 300 more points down from here. And that would be about 700 total points off of the high $700, which is not that big. This is just a modest correction that we're looking for in here. And then after that, the opportunity as this turns up again and very likely gets through that high. So we're in a period that could be pretty choppy. Again, you can see the reversal scout right over there, and that is showing you that it is green. Now, in periods where the weekly pattern has a green or positive momentum through the as shown by the reversal scout, and the monthly has it, that's periods that can really spike up. Let's take a look here and make a comparison now. So this is the weekly on the right. This is the monthly on the left. And this corrective period that we're looking at right in here is the same one that's built right in here on the weekly chart. So what we want to do, let's blow this up right now and look at it on the weekly, and you'll see that there are actually two different lows that could happen that are synced with daily troughs. Now, I'm not going to show you the daily cycle, but I actually put that in there for you to see right there. So what it calls for is maybe a short-term low in the next week or two, then another rally, but then coming down again towards late year over here on this weekly chart. So the most likely is that sometime around January we're going to see that low, but that still doesn't line up with the low that we see out over here that's coming on the weekly chart. That's further out there, out in April. That next one would be this cycle right over here that goes out April, May, June. So that's where the corrective period can go out to. Right now, what we're looking at is a potential for a bottom to come in here in the next week or two, and then a rally, and then come down again. That's the way that syncs with the daily patterns that we're looking at. So all of this is part of this bigger corrective period that you see right in here. Now you can see where the reversal scout turned positive on the weekly chart right over here in August, and that was right over here in August. So that was a period where you got another upside wave that came in there. Here, if you look here where this corrective period was in July, end of June, beginning of July, right in there, that existed right over here where this was green. So what that did was influence this to not be any kind of a decline in there. It was just this sideways correction. And then when it broke out above that cycle peak that you can see we had noted in there, that was positive and it exploded to the upside. So this is how we use the information that we have in the weekly versus the monthly versus the weekly, bringing in even the daily information. This is how you really understand the movements in the particular stock or commodity or ETF that you're looking at, by bringing in these multiple time frames. And of course, our workshop, we have a special right now, and you can learn about how to do that by investing in our workshop, which is on a special right now. So again, what we're looking at here is momentum very strong, as you can see in both the monthly and the weekly. We have a correction in here that has started, as you see right over here with that big shooting star. And let's just blow this up right over here. This is suggestive here of a weekly trough being formed in here. But because there's no real visible correction in here, it suggests that this next cycle will then have a rally and then come down again. So that would mean that once this low is established right over here, which comes out towards the end of the year, you probably get another rally right in there that doesn't get to a new high, something like this, and then sometime out there it then turns down again to complete this. That says to me we're going to be in a compound top, a corrective period that could have a lot of movement in it. And again, this is 3,700 there. I'd be very surprised if it got to that support around 3,480. It is possible, but you can see these supports as they come in right over there on that chart. So big picture, super bullish conditions that we see in here in a corrective phase that could get it down really to about 3,700. It should be quite choppy and a lot of movement out over here before this trough is set. So this trough over here, based on the daily chart, says it's most likely that it will come down into sometime in late December or January, try to rally again, and then come down over here into April, May. What's interesting is that this decline over here is very much in alignment with what I believe is going to happen in the stock market. In other words, a large downside correction in the stock market into sometime Q2, maybe Q3 of next year. And when that happens, it's likely to be a liquidation in many things. And gold, silver, the commodities, they won't be able to withstand the amount of selling that could come in there. Because usually when there's a liquidation, investors, they don't stop with just liquidating stocks. They have to raise cash, so they liquidate everything. So gold would be caught up in that downside move that I think is coming at the end of, in the middle of next year. It's likely going to be a decline that lasts for many months, and you can see in here the gold market looks like it is set up for that. So look for a bouncy market right now, probably a short-term low to be set. Some upside attempts, but really I don't see a end to this correction until sometime second quarter of 2026. That is a look at the big picture for gold. Important information. This tells you about how we do analysis and about you using what we put out or what anybody puts out. And the importance of trade ownership. You must own your own trades. And always want to tell you to consult your own advisor or your own trading plan. We are not responsible for your trades, only you are, whether they're positive or negative. This is our cycle analysis workshop special. You're going to learn my method of analysis. I developed it over 50 years. Yes, that's correct. I became a member on the CBOE in 1974, and it was 1975 when a friend of mine, a drummer in my rock band from high school, handed me a book and says, you have to read this book, Profit Magic of Stock Transaction Timing. Out of that evolved the style that you see us using right now. It took me 2 years to write this and over 6 months to produce it, and we've added many videos to it after that. There's now 26 videos in there, plus many, many tools for text videos that you'll learn so much about analysis of the markets. This is an online lifetime access. You don't need a special platform. Everything is there for you, access anytime and from any device. You'll look at charts. You will never look at charts the same way as you did before. Learn to improve your directional decisions and project in time and price. And there are bonuses in here. The Cycle Analysis Workshop now includes Slim AI, which is at the bottom right of the page. And it will coach you through all of these videos. You just ask it questions. It learned it all, and it can coach you very closely to the way that I would. There's over 4 hours of extra cycle analysis teachings in there and addendums that have been added since the original release. Level 4 members, you get an extra $100 savings. So right now this special is reduced from $12.97. Wow, that is a low price for this. All the way down to $8.97 for everybody except level 4 members. You could save an extra $100. Just contact Matt, receive those exclusive discount links, or go up to this area on the website, go to the front top, and you can click on there and you can see, save $400 on the workshop. Again, become a level 4 member or a level 4 members, write to Matt, get that special link, and you'll be able to get this for only $795. All of this teaching, just absolutely amazing. You can learn how to do the analysis as we do. And you will learn so much more. You're going to look at charts so differently than you ever have before. All right, stock market. Well, for the week, stocks chop lower. Pretty much lower as bulls try to hold it together, but weaken as upticks now fail fast. AI stock sentiment changes from unnecessary spend, all that money, to their overspending. Monetization, nobody knows. There's a few stocks that supply the architecture, and those are the ones that are making money, like NVIDIA, but the other ones that are trying to catch up within that ecosystem and develop AI, they're the ones that are spending massive amounts of money. And finally, that AI spend is being scrutinized. Look at Meta. I mean, that plunges 150 points on the downside. Now, for the stock market, and valuations are a big concern. JP Morgan, Goldman Sachs, Morgan Stanley, they warn of a 10 to 20% pullback in the stock market. We have been warning about that coming. The government shutdown now, 38 days long. Of course, that's a record, but the leaders are still very entrenched. Now, flights are being canceled. There are long delays. There are lines at food pantries, which are bringing optics reminiscent of the 1930s. Well, these leaders are going to start worrying about their jobs because that's really what they worry about the most. And before you know it, they're going to be forced to come up with some kind of a deal in order to get the government workers to get paid, the people that are entitled to get paid for the work they do, and for those SNAP cards to be available again. We don't really want to see food lines out there, do we? SCOTUS, well, Supreme Court of the United States, looks skeptically at the Trump tariffs. Now, remember, the tariffs have not mattered at all. The market went up when the tariffs were on. It doesn't, there's all kinds of rhetoric on there. If the tariffs come off, well, then how are we going to pay down the deficit? If the tariffs stay on, then it's inflationary, and the markets have not cared about that. And for those of you that are thinking, okay, we can get at Trump, and I'm not supporting Trump, or not, I'm supporting him or not supporting him, neither of those. What I'm telling you is that there are lots of ways that the tariffs can stay on. There are many statutes out there, and there are not going to be any refunds. So if the Supreme Court does say that Trump didn't have the power under the code he's using now, he's going to pick another code, and those tariffs are going to stay on. Challenger, well, that reported that companies have slashed 153,000 jobs. This was the worst report since 2003. If there's any sign that the economy is slowing, well, certainly that is it. I happen to think that the AI spend is what has held this economy up and what has masked over what is a significantly weakening condition. And that is very, very likely to be an influence on the Fed in the next several meetings. They may not cut again in December, but we're probably going to get some cuts early part of the year because the economy is very likely to take a dip. Earnings, they're widely mixed. The best one of the widely held was Micron. That had a big jump, but PLTR, CRM, AMD, they were big losers. Stocks that had gotten a big lift in the AI craze and now giving significant ground to the downside. For the week, stocks are lower. The indexes are down 2.5% to 3.5% as of 10:30 a.m. Eastern Time. This is the time I'm doing this recording. And interestingly, there are no safety bids in bonds or the dollar. What we really see is people moving to cash. That's bad news for speculative areas, especially crypto. Well, you all know that I'm pretty negative on the crypto market, on the Bitcoin market. And right now, we see Bitcoin down from $126,000 down to about $100,000. And they're trying to make a stand at 100,000. I think it's going to break down under that level and then get a little bit of support. But look at our analysis that we have put out on the Bitcoin market, on the strategy market, MSTR. They've all been very negative. We nailed that, and there's more downside to come. So that is what's moving the markets so far this week. We're going to move over to the stock market charts. We're going to look at the S&P 500 here on November 7th. I want you to watch FutureSpeak. This is for levels 2, 3, and 4. For all the other updated analysis of the indexes, plus metals, currencies, foods, energy, crypto, that's all in there. And Arvi does a spectacular job every Wednesday, and that's for levels 2, 3, and 4. So do become a member and do watch that video. And earlier in the show, I talked about this new video category called Inplay that Matt is introducing. He does a fantastic job on that, really teaching how to know when a trade is in play, and that's a new video sector, again, for levels 2, 3, and 4. Let's take a look as we look at the charts here. So we're going to come down and look at the S&P 500. So we're looking at the S&P 500. The left chart over here is the weekly chart. And what we're showing in here is our reversal scout right there and the 34-week moving average. I like to look at the 34-week moving average because when we do cycle analysis, that tends to be a magnet. And I'll show you that. As you can see, it touches it under here, and that big breakdown here. And then after the break, of course, crosses it. So this is an important moving average. A lot of people look at the 200-day moving average. I recently did a video that compares the slim ribbon to the 200 and the 50-day moving averages, which are so commonly used. And the slim ribbon is just a far, far better way to look at the markets. And this is the slim ribbon right over here on the daily chart. So let's look first at the weekly chart. And this, you can see, only has that little bit of information on there. But I'm going to switch over now and look at the weekly chart, and you'll be able to see with our cycle analysis, as the analysis pops out at you, you can see right there. So now what we're looking at is the money flows, essentially the movement in and out of the market, which occurs on a somewhat regular basis. If you look at the minor cycle right over here, you can see that, well, the movement in there is very close. I'm just going to trace this out for you. Minor cycle here, minor cycle here, minor cycle here, and here. All of those beautiful rhythms. And what we learn from the shape of them is the condition of the market, and also the momentum conditions based on the reversal scout on the weekly chart is what I like to look at. Again, that's the 34-week moving average right over there. So now what we're looking at as we look at this last cycle right in here is that we had talked about the yellow zones, the corrective period, and you can see as this now has turned lower that we're very obviously in this corrective period. And again, you could see the minor cycle, and that minor cycle that comes out over here to late December. That has a pretty good alignment with this 37-bar weekly cycle, which we give credit to MVP for putting it on there, and he's right. I mean, when you look at the movements in here on that cycle, it's pretty clear as they align all the way back over here to those key lows. I mean, it's really a good catch by him that these cycles are that consistent, and that takes you out over here to late December. So a lot of people writing to me, Slim, you're looking for a decline into late December. I mean, what about favorable seasonality? Well, more years than not, December is up, but some years it's down. And I think that this year we're going to see some declines into December. You can see that evening star shaping right in here, and often that is what makes a top, is a candlestick like that. Here you could see it was an engulfing pattern right over there that made that top. So the candlesticks are valuable. This is interesting because you got that engulfing pattern right over here, but then it didn't follow through, and you got one more surge on the upside. So many people say to me, I keep saying so many people, but I get lots of comments on social media or emails sent to me that says this is not going to end until we get an upside explosion. There's got to be a hook. There's got to be a market that just runs itself out by going to the upside in a very significant way and then making that excessive top. Well, I've traded the markets for 51 years. I've traded every bear market and every crash. That's a crash of 78, the crash of 79, the crash of 87. All of those, I've traded every one of them. And believe me, there's not one time when anybody rang a bell and said, that's it. We could have seen the top already to this market. A lot is going to depend on the depth of this decline and this corrective period and these positive periods out over here. Can the market have a correction and then make a new high in here? Well, that's possible. It's also possible that we are seeing the top being formed right now. I can't make that call yet. All I can tell you is that we're very likely entering into this corrective period. I don't have these extended to any price levels on the downside yet. Why is that? Well, because we have momentum conditions that are still positive in here. This hasn't turned down yet. So, what's to say that the momentum won't catch on again on the upside and extend out what this top period would be. So I haven't turned this down yet, but I'm thinking that there's hardly a way that it can avoid this 4.9% drop. That's nothing at 65.72. That's only 90-something points lower than where it is right now. So that's like nothing. Most likely it's going to touch this 23% retracement level. That's off of this bottom here. That's a 6.9% drop with a very good chance that this corrective period gets down 10 to 11.3% down over here. That's prices that are down around 6,200 down to about 6,130 down over there. So were this momentum to turn negative right there, then I would be taking this trend line and I would be pointing it down to somewhere over here into that December period. So that's what it would look like once we get the momentum turning negative. Now, there are some signs on the short term that it is turning negative already, but it is not very significant yet, I'll tell you that. And that is here. Now, this is the S&P 500 on the daily chart. I'll bring in the cycle analysis in a moment. I want you to see what we've done since April before I bring in that cycle analysis. So we're looking at the slim ribbon, the reversal scout, the slim ribbon PO, and the option bias indicator. Slim ribbon is a free indicator. You can get that for Thinkorswim from our website, or you can use it on Tasty Trade or Wealth 365 charts or TradingView. It's on all of those, so you can use the slim ribbon, and that's right over here. You can see that the slim ribbon turned positive right over here. It stayed positive this entire rally. So this time it turned positive back here in April, and you got a little corrective blip here, but then it turned positive again right over here just 2 days later, where it went neutral and then positive again. But now it is turning neutral again. You can see that arrow right there. The reversal scout is also rolling over. These are not enough to turn our short-term indicators bearish yet. So what we're getting is the signs only of a corrective process beginning. Look at the slim ribbon PO. Every one of these arrows tell you upside momentum resuming. Every one of those in this whole period now here. Here's where it went neutral, and here it's going neutral again as this market starts to bring sellers in. And not enough yet to really say anything significantly negative. Still, we're getting to a cyclical period where the decline can turn into something that is more negative. And I'll show you that as I bring in these cycles. So we're going to look at the cycles right in here as they pop out at you. Now, each one of these vertical lines is where a significant cyclical low has occurred. And this right over here, we derived from the FEZ and the DIA. They have a 26 bar that is the biggest influence on the market right now. And any other things that we were looking at, we took off of here because this is such a clear influence. Now, you can see on here the option bias indicator. This has stayed positive the whole way. So this has told you that, you don't really want to change your position much off of positive in your options until the market really tells you to. I think this is going to turn yellow in the next couple days, and that will be the beginning. Now, we're probably going to see a more compound top being formed. So as this turns over and this goes neutral, then I put in this downside projection line. This is the 78.6% level right over there at 66.28. That is a warning level. Approaching this tells me that the upside forces on the weekly chart, the dominant, are giving way. Without that happening, this could not happen, where it's going to get down and test this level. If it broke 65.50.78, it's an absolute confirmation that this weekly chart peak is in place. If it breaks this area right over here on the 78.6% at 66.30, that is a warning that top is in place. So it's a difference of a warning or a confirmation. Now, if you look at the cyclical timing in here and you see these blue lines, that tells you that somewhere in here is a cycle trough that will be formed. What that means is that this decline will end, and then there'd be a rally attempt in here. The deeper this goes, the less likelihood of this coming up and making a new high in this next rising phase. Why is that? Because we're learning from this action that this intermediate weekly pattern is weakening. and that it will not force these cycles to be positive anymore like we're seeing here on the daily chart. That's how you use the combination of multiple time frames to understand the market. Again, we're offering our cycle analysis workshop right now, which teaches you all of this in 26 modules. So it's just fantastic. Please do go look at that. So that's what's key right over here. So now let's look at the two scenarios in here of the market as we take a look at a bullish scenario first. So the bullish scenario would be this. You can see that, and what that would mean would be that this weekly pattern in here, which isn't due to make a bottom for several weeks out there, would probably have in the next, let's say at 5, 6, 7 days, a bottom formed in here. You'd get another rally. It could test this high or not, and then come down again, and you'd get this kind of sideways range-bound move in there. That would be the bullish case, where it comes down here. Even if this break was deeper and came down over here, then possibly what you'd get is something like another rally right in here that moved up into here, and then it met some resistance here and then had a similar downturn. So it would just mean the deeper this gets, the lesser rally that you would get out into this period, and that takes you out into sometime late November to early December for one of those rallies. So that would be how it would change if this fell a little bit deeper. But if it got very deep and got underneath this level, then the bearish scenario takes hold, and that would be this one right here, where it says, you get down under this level over here of that support, you come up and you have that kind of rally, and then you have a much steeper sell-off down to that 10% pullback is where that is right over there, which takes you down to the weekly 38.2. That would take you down, under 6,200, maybe close to 6,100 in the S&P 500. So this is the bearish scenario right over there. You can see it's moving underneath the support zones. There was a higher one that I took out of there. Again, that's that 78.6% at around 66.30, 66.31. And this is that important 65.50.78 level. If it breaks that, the top is in, absolutely. And then the next rally would be a failing rally, and then it would very likely have a sharp decline over here into that period in towards Christmas. Yes, the Christmas rally probably in that case would come between Christmas and New Year's if this is the way the pattern shaped up. And I'm telling you, based on the kind of decline that we're getting in here right now and the sentiment change in AI, I think this is the more likely scenario looking at this. Still, I gave you both scenarios. This is the negative one right over here. This is the more positive one right over there, where it just has kind of a range, and that range in there is what makes this top on the weekly chart, and the decline probably is only in the area of 4 to 5%. From that, and that of course would be bullish, and you'd be moving up again in this next period over here, which takes you out into January. Again, you can see where this corrective period ends over here in December, then these next cycles over here turn upward, and you get a Q1 rally no matter what happens in here. That's how the timing would resolve itself. So that's a look at the weekly here on the left, as I brought you that scenario and how it affects the daily patterns over here on the right, and what the likelihoods are for a market pullback to continue. They're very high and likely well into December. The only question is, how deep does it fall really in the next 4 to 8 days? And that will give me some kind of a message as to the overall market conditions. So that is the look at the stock market. Now we're going to look at our very, very valuable ranking system right now, which is something I don't show here that often, but I wanted to bring that to you right now, and that's right over here. So this is our ranking system. What this looks at is the 84 different widely traded symbols. So if you're an option trader, you're probably trading most of these or a lot of these because they're widely held, they're active in options. And what we do in here is we have a directional bias, and it tells you what the directional bias is. So these are the very bullish ones, and you can see the analysis suggests strong positive conditions. It favors the long side, as you see there in applied material. And what it's showing you in here is the conditions, the intermediate term and the intermediate term cycle condition right over there. And it gives you the long-term, intermediate, short-term, and the OBI, option bias indicator. So that's a good way to be able to see the conditions. And these are the ones that are bullish and very bullish that you see right over there. If I switch over here to a negative condition in here, you could see Meta, which is down 150 points just in the last couple of weeks. That's oversold. Now, how do I know it's oversold? Well, technical analysis, potential upside short-term rally in here under a negative intermediate condition. So you could see they're negative right over there, but look at this is orange. And when it's N1 orange, it says to you, it is extremely oversold. It's so negative that it's likely to bounce pretty soon. So if you were a trader and you wanted if you had a short position on and you saw this, you'd say, well, it's probably time to take some in. Or if you were aggressive, you might say that it's time to trade for a bounce. But you could see the ones that are very bearish or very bearish oversold. If it says oversold, it's because the option bias indicator has turned orange. So if you wanted to be able to scroll and say, well, which ones are the most negative or which ones are the most positive in the OBI, you could do that right over there. That shows you right there. I'm looking specifically for the ones now that are orange. Look at that. So in here you could see natural gas is overbought on the upside. That's P1 orange. The dollar index is P1 orange. It's slightly overbought. So again, these are things that are overbought. P1 orange, this is the soybean market, the wheat market, and that's the ones that are overbought on the long side. Here you could see overbought on the short side right over here, in other words, decline. Boeing, Meta, Netflix, Nike, Timus, here's the Great British Pound. Those are the ones that are N1 orange. You could see there are a couple more there, the Euro dollar and Bitcoin. Those are the ones that are oversold. Now, if they're oversold, but you see that the short term and intermediate term and even the long term are negative, that tells you that the bounce is likely to fail. So you wouldn't want to be in that trade for very long. It really gives you some sense. And then if you wanted to understand, why some of these are positive or negative, let's go back to the positive right over here. You see AMAT very bullish. You could look at the weekly chart right over here. It's going to pull it up and it shows you how bullish that is. So that it gives you an idea of how to use that. You can go to the daily chart right over here on applied materials, and you can see it's just super bullish when you look at that. So there's a unbelievable amount of information that is in here. So you can just type in a symbol, and you can really get a great sense for the conditions of the market in the widely helds right there. So the ranking system, it really gives you a good idea. I showed you the bullish ones. I showed you the bearish ones. I showed you the ones that are overbought. I showed you the ones that are oversold, how to find the charts. All of that stuff is on here. It's just absolutely incredible, and I invite you to become a level 3 or level 4 member to get this ranking system. So wanted to show that to you today so you get a good understanding of which stocks are doing what, or which ETFs or futures those are in there. So the askSlim rankings system. That's everything I have to show you today. Do get acquainted. Go to our snapshot. Go to our free stuff on the top. Sign up for Snapshot Lite. If you are brand new, you'll get our information from Matt every day in his report, the SIR Lite on the S&P 500. On YouTube, subscribe to this channel. Click the notification bell. Like the video. Give it a thumbs up. And follow us at askSlim. And any questions you have on our memberships, information, questions on our huge offerings of education and analysis, or our specials, please write to Matt at askSlim.com. That's it. I want you to be so incredibly careful because it is so dangerous out there. And I'm always wishing you great trading.
Well, I'm going to sit and